Hey everyone, welcome to my YouTube channel where I teach millennials and Zoomers personal finance and self-development to help you guys level up and achieve financial freedom. If you haven't subscribed yet, please consider smashing that like and subscribe button to help my channel grow and so I can reach a wider audience. So in my last video, I talked about the magic formula stock investing strategy, which is definitely an active investing strategy that will help you identify good companies at cheap prices. And I'll put a link for that video up in the top right corner here. But as you know, the magic formula is a great investing style for those who are interested in active investing and actually getting the chance to pick individual stocks and companies that they believe will grow over time. But for a lot of us, we just don't have the time to do that, or to be quite honest, we're just a little bit too lazy for that. And we need an investing style that matches the amount of effort that we want to put into it. And so today I want to talk to everybody about how passive investing works, and specifically buying index funds and holding them over the long run and how that can generate wealth for you. So passive investing usually takes the form of an index fund, and an index fund is essentially a vehicle that you purchase and it tracks either the entire stock market or all of the companies in a specific industry. Now contrast this to an active investing strategy, for example, picking either different stocks or buying an active mutual fund where you buy a vehicle or a fund where the portfolio manager is picking specific investments in the hopes of actually beating the market or the S&P 500. And I want to make it very clear here, passive investing is by no means a bad strategy at all. In fact, over the past 20 years or so, you can actually say that most active mutual fund managers, those people who you're giving your money to and hoping that they actually beat the market and give you a better return, 90% of them do not beat the market. I really think that the best way to sum up this strategy is to basically say, if you can't beat the market, join the market. So does actually just matching the stock market and trying not to beat it give you good returns? The answer to that is a wholehearted yes. So if you take a look at the time between 1957 and 2018, over that long time span, the average rate of return per year was 8%. And to really put that into perspective, if you invest $1,000 a month for 30 years at an 8% rate of return, you would have a $1.4 million nest egg at the end of all of that investing, even though you only put $360,000 of your own money into that, and the stock market was able to help you grow up to that $1.4 million. And so one of the best advantages of using a passive index fund over an active mutual fund would be that you save a lot of money in fees over the entire time period of your investment. So any mutual fund that you buy, or like a basket of investments that you might buy either from Fidelity or Vanguard or whatever mutual fund company or broker that you use, there is some sort of expense fee that they charge per year on your entire investment. Now, for a lot of active mutual funds, they are charging anywhere from 0.75% to 1%, and I've even seen an expense fee of about 2%. And that 2% or 1% that I was just talking about, that's 1% on your entire investment that is in there. So if you have $10,000 in investing and they charge a 1% fee per year, they're charging you $100 per year just for investing with them. One of my favorite index funds, which is a Vanguard fund called VTSAX, actually only charges an expense fee of 0.04% per year. So if you had a $10,000 investment, they're charging you only $4 a year versus that active mutual fund that may charge you about $100 a year. So if you're looking for some good index funds to invest in, the first one that I would honestly check out is the Fidelity Zero Large Cap Index Fund. I think the ticker is FNILX. And that's actually one of the first mutual funds I've seen are zero expense fees. Absolutely zero. And maybe there's something hidden in the fine print there that I haven't read about, but I know that there's no account minimum and no expense fees at all per year of investment. And that is really quite awesome. So props to Fidelity there. So if you actually want to purchase this zero fee fund from Fidelity, it's super simple to set up an account with them. All these brokerage and investing companies, they really do want you to invest with them, so they make it really easy. All you do is go over to fidelity.com. There's probably about 3 different spots on the website where you can click open an account. And from there, you can just open up a regular investing brokerage account. If you're trying to do an IRA or anything like that, they have those options too. I'm not gonna go in depth as to which one's better or anything like that. That's a good topic for a different video. But all you do is go try to open up, click open an account, and then click open an investing brokerage account. And then from there, they're gonna ask you a series of questions and collect some information, just so that way they can help you file your taxes. And you should be well on your way to investing in some really cheap index funds that Fidelity has. And by the way, I am not getting sponsored by Fidelity to push their funds. I just happened to come across one of their funds while researching some items for this video, and I thought it was really cool. In fact, for my own portfolio, I personally use Vanguard because I really like the website. I like their philosophy of how the investors technically own the company too. But the funds that I invest in, like VTSAX, it's 0.04% and it doesn't have a zero expense fee, so maybe I should consider switching over myself. Thank you guys for tuning in today. I really hope that you found these tips helpful. If you did, please press that like and subscribe button so we can get more people on this channel and I can help tell more people about investing and some other self-development topics as well. I really hope that this video on passive investing is really helpful for you guys. I know sometimes just life gets really hectic and it takes a lot of time to research what stocks you really want to buy or how to invest. And I really think something like just buying an index fund and holding it for 30 or 40 years is really a great way to build wealth over the long run and achieve your goals of financial freedom. Thanks everybody. I'll catch you guys in the next video. Keep leveling up, saving, and investing.